Hello to everyone. Today I am here with Anti-Money Laundering Part 4. If you are interested to have more videos on banking and finance related topics, please do subscribe my channel. Anti-money laundering, suspicious activities. It's very important topic. Now, in this session, we are going to cover introduction to suspicious activities, suspicious transactions, reporting and record keeping, customer suspicious, information, cost might suspicious. Introduction to suspicious activity, anti-money laundering firms keep on changing their techniques to effectively identify the money laundering. Money laundering are constantly looking for more opportunities to increase their possibility. Now here on one side, the money launderers used to change their strategy, and on the other side, the firms used to introduce new techniques to detect the money laundering. Money laundering firms use red flag to detect money laundering activities. Activities can vary by industries, and compliance team may have different thresholds for different type of the transaction and different type of the customer. They set their different thresholds. Employees should be aware of what sort of transactions can expect to see. Employee finds the transaction suspicious, the business is obligated to review whether there are reasons to be so. Transaction resultant not suspicious. It is not obligated to make suspicious activity report. So, suspicious activity report is either obligatory or not. It's the pure decision of the transaction dealing person. What is suspicious transaction? Here is a non-exhaustive list of examples of transactions that a business might find suspicious but necessarily indicate money laundering, so the business should consider whether to file an SAR. On the other side, the customer opens more accounts than the necessary and transfer money between them. So it becomes suspicious why the customer is opening more than one or two accounts. That might not be its requirement. A corporate account mainly make deposits or withdrawal in cash. Normally, in case of a corporate customer, they used to deal not mostly in cash transaction. If they are dealing in the cash transaction, so they will have to look in depth. Now, alternative are check cashing services does not ask for cash when the business expects it to. In case of a business, normally transactions are done through the cash payment, through the check payments, or many times they require the cash to meet their expenditure, at least petty expenditure. If they are not asking for even a single penny in cash, so it becomes a suspicious. This could indicate the access to an alternative source. The customer makes the transaction that are inconsistent with bank's understanding of what customer does. There is no regular activity on the account. The customer use it to store the fund, then transfer abroad. So these are very important examples that should be considered by the bank or account dealing officer. On the other hand, a customer make large deposit but does not use any other bank services. A retail business deposits check but rarely withdraw cash. A business that would not usually make overseas currency make lots of currency transactions. the owner of a single retail business make multiple deposits in a day at different branches. This could indicate an attempt to avoid the triggering a threshold. So thereafter, avoiding a national reporting on record keeping requirement, regulator requirement concerning how much money a customer can deposit in a particular type of account. One example is record keeping and reporting threshold. These rules may be set by the local regulator, national law, or the company's internal policy, and customer may know about them. The customer might make deposit of, for example, $9,000 in cash to avoid the reporting threshold of $10,000. If the customer is repeating such transaction, it also becomes suspicious. The customer used ATM to make deposits or withdrawal just below the reporting threshold, avoiding face-to-face contact. So the banker or the dealing officer should know about the customer. Many times customers avoid to visit the bank or have an interaction with the bank officer. It is also suspicious. Wire or fund transfer, payment the receipt without an obvious connection to legitimate contact, goods and services. Wire transfer from personal account to country with the high level of secrecy in banking. Deposit of the fund into the several accounts that are then consolidated into one account and transferred overseas. Moneylender tries to play smart and provide the data that does not appear to be consistent with the customer's activity. Sometimes it's not necessarily that the customer is laundering money, but business should be aware of possibility. Here, one important thing is the bank dealing officer should be well trained and having in-depth knowledge about the transactions related to the type of business a personal or the account holder is involved. Customer suspicious information, list of the few signs that may be reason to be suspicious. A customer provide the unsatisfactory necessary information to the banking services. A customer want to open an account hiding permanent address or adequate identification. The customer provide identification documents that are hard to verify. A customer applies for a loan but no need of employment. A business want to create a new account but is reluctant to provide the information about its purpose of business, prior banking relation, or the names of its officers. A customer financial statements are different from those of the similar businesses. The above signs are not apparently provide that the customer is breaking the law, but they do provide reason for it, the reason to investigate more closely. Thereafter, even that might cause suspicious transactions that could arouse suspicion, transactions without an apparent purpose. Using non-residence account or structures in a situation where this does not appear useful or necessary, a customer requests a transaction that they would not usually request. Transaction to or from the high-risk country, which are not consistent with the customer's foreign business interest. So here, information about the business and the type of transaction, either matching or not matching, is important. Thank you very much. See you again with the upcoming video on anti-money laundering.